Jen?
I think from a civil rights point of view, we look at the access to credit, and both my colleagues talked about credit. But to drill down in that, we're looking at higher credit scores being required. We're looking at higher down payments. So if we don't have access to credit, if we don't have underwriting that makes sense, as Jerry said, people went to an extreme. And we're in this swing now where I've had lenders say to me, I'd rather make a loan to a couple who is older, who may have a lower credit score but have a long history of making payments, than to a 29-year-old couple who have two good jobs and a higher credit score. So the industry is trying to figure out who are they going to loan to. And with the stagnant income that Sarah discussed, we have to go back and look at what are the appropriate loan products. 30-year fixed rate loans are the appropriate products for most people in America. The exotic products, the ARMs, the option ARMs, the no docs, all of those were products that were created for a particular economic class, and that was a very high income who had increasing annual incomes. Those products were pushed out to the middle class and low and moderate income people, which forced us into the foreclosure rates that we see. So we have to get back to the middle, be sensible about underwriting, and make sure that down payments can be under 10%, and do good underwriting. Do good underwriting again.
Why the gap, Alex?
My question was going to be, who is that 60%, and what's happened to Latinos, African American, Asian Americans, immigrants? Those families were buying homes and sustaining the homes. What happened to them in the market was the refi pushing and the adjustable rate mortgages, and people saying, you can get this lower interest rate. And then, as Sarah was saying, in the 80s and 90s, the community development plans across the country helped build new housing for low and moderate income families, and they were in the home ownership market. They were there. I think that we have an obligation, because of the discrimination that happened during this whole process. And what interests me is when people, particularly economists, talk about the fall in the market and the foreclosure. Those of us in the civil rights movement saw this issue happening in the 90s when the predatory lenders and the people pushing ARMs went into the senior citizen black neighborhoods across America, stripped them of their equity. They perfected their activities at that point, pushed it then in the 2000s, and not only stripped Latinos and African Americans, but then the middle class white families. So we have to look at the impact of discrimination, regulation, enforcement of the fair housing laws, fair lending laws, so that people of color get back into the market. I think it's based on loan products. In the past, Fannie and Freddie created and suggested products to the U.S. Department of Housing and Urban Development that had 3%, 5%, 10% down payments. They also had products that they wanted to introduce that the regulators didn't let them, would allow new home buyers to get what would be an insurance. Because most of the people are not buying new homes, I'm sorry, because they can't afford them, but they're buying existing homes. And these products would allow for a payment to be made so that every year the systems in the house, the furnace, the air conditioning, the roof, all the major systems would be checked, and if they needed assistance, that insurance would pay for repairs to sustain the house that low and moderate income people could buy. The regulators wouldn't let that go through. And so if we're going to increase this, we have to have special loan product programs that people qualify for, make sure they can sustain the monthly payment, and to have a payment to sustain the house at the same time. We can do it. We did it in the 80s and 90s. Well, I think also in the poll they said greed, 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 and that greed came from Wall Street and the lenders. And Fannie and Freddie should not have jumped into the market and bought everything that they did. And in one respect, something Alex said earlier, I think I agree with, of we've got to go back to a sensible housing market. And I believe if the GSEs did not have shareholders, they wouldn't have dove into that. And dismantling GSEs doesn't quite make sense to me. I think you have to fix it. Get rid of shareholders, get rid of that profit-driven area, but we cannot leave lending in this country in private market completely. They have historically discriminated against people of color, low and moderate income neighborhoods, single female-headed households, and we do investigations. And our most recent look at this within the last year and a half found that African Americans and Latinos who were more qualified than whites who went in to inquire about a loan were given loan products, but the higher price loan products. I totally agree with what Sarah and Jerry just said. I don't have anything more to add.
Okay.
It would be devastating. Well, I think there should be a debate, and I think what we need to see, and I think someone mentioned last night, the tiering of the access to the mortgage interest rate deduction. I think low and moderate income people, it helps them. I think people with second homes, they have rental income, they're able to depreciate the property, so they have some other benefits that they receive from that. And I was thinking, you know, in the mid-1980s when the tax reform came through and we were no longer able to deduct our credit card tax, our car interest tax, our other taxes, we still bought cars, we still used credit cards. So I think, you know, there's always an adjustment period, but I agree with Sarah that we have to have some reduction in it, but have it benefit low and moderate income families.
Jerry, I'm going to let you back.
Everybody talks about competition in the market, and I think there always has to be that competition. Right now, FHA, you pay your MI, your mortgage insurance, for the life of the loan. And if you're in the private market, you can get that 80, get 20, 25% equity, and you can get rid of that payment, which is a very high payment right now. I think FHA should just be one of the alternative products that are available, and people should not be pigeonholed into a particular product. I don't think it's the cheapest product for people. We've always had a dual housing market in this country, and the Kerner Commission report came out and said there is a black and white America in the mid-60s. FHA in the 80s, one of the foreclosure issues that came up was in Detroit, and it came up because appraisers went in and real estate agents went in and sold homes whose furnaces weren't working. They sold them in the summertime, and people bought homes that had no heat. And so FHA was the only financial market, except for some mortgage brokers, in the 80s in neighborhoods of color, and we can't go back to that dual market.
We're slightly over time.
I hope we have a blend of the two issues you just discussed.
Ms. Smith.
I've been investigating mortgage lending discrimination since 1977. And when the subprime market came about and grew exponentially from 1992 to 2002, we saw the inflated appraisals happening. I actually met with the largest company at the time who was selling all of the appraisals to the lenders. And I said to him, do you understand that you're churning these inflated appraisals, that when an unscrupulous lender and appraiser puts it into the system in a neighborhood, then other lenders don't understand that it's just artificially increasing the value of the properties, and that you need to do a better job about this? And his response to me was, I'm just taking public records, so I'm not discriminating. I said, I understand you're taking public records, but you have some responsibility to do due diligence to see if those appraisals are accurate. Then Fidelity bought them, and it kept a churning. But I was looking at this from the 70s forward because I saw this happening first in the African American communities. The lenders who saw the high equity that particularly senior citizens had in their homes and ways to strip that equity. And North Carolina passed the first anti-predatory lending law to address this. The Attorney General should look at not just loan origination, but underwriting guidelines that were directed to have higher cost for people of color in neighborhoods. For example, we filed a lawsuit against United Guarantee, the fourth largest mortgage insurer in the United States, in 1988, because they had limits. If your home, I'm from Toledo, Ohio originally, so when I say to you that you had and you know this, Congressman, because you're from Detroit, You can have beautiful homes that are under $40,000, 3-bedroom frame homes with garage, well-maintained homes. And we uncovered that the mortgage insurance companies had a minimum insurance amount, so that if you were putting less than 20% down on your property, they were denying they were denying mortgage insurance on the house, which then made the lender reject that loan, which made them then go to a hard money lender to get a loan. Now, this was in the 70s. We saw it replicated in the 80s, in the 90s, and now today, that the lenders just kind of twist how they're making these loans and what kind of activities they're going to engage in to make it a higher price loan in a neighborhood of color, or a higher price loan to a senior citizen regardless of their race, a higher price loan to women. The Justice Department did a great job with the Long Beach case back in the mid-90s. They were first to understand with that case in Decatur Federal that there was a subprime market and how it was acting. And I think if the Attorney General would look back at those cases in the early 90s and the mid-90s and start looking at all the players in the mortgage lending market and see what their role was. And then we have to jump to Wall Street, because Wall Street paid a premium to lenders to push the exotic loans, the adjustable rates, the 227s, the 327s, 228s. They paid a premium, and the lenders told me this. I didn't make this up. They came to me and they said, Shanna, you want to criticize us for pushing ARMs, but they pay us more to push these loans. And we all know, some of us are old enough to know, that when the adjustable rate loans were first made, the 525s, it was for a niche market. It was for people who had increasing incomes and lived in neighborhoods where the property was appraising and appreciating pretty rapidly, so that it wasn't a risky loan. It was made for that particular demographic. It didn't include me, but it included a lot of other people. But then they pushed this exotic loan into the full market and onto people who just didn't know that these loans weren't good. They sold it to the real estate agents who said, you know, you tell me you're qualified for a $200,000 home, but I can get you into $300,000, and here's your payment. Lenders would say, and real estate agents would say to people, what do you want your payment to be, rather than what can you really afford in the long term? And they kept saying, oh, you can just refinance it. And I listened to that for a little while, because I pay my bills on time. I thought, well, yeah, you could just refinance. Then I realized, well, anytime you buy your house, you know, you buy something for the house, or during that 2 years you might get another car, and your debt to income ratios change. So you can't necessarily refinance it. So I think if the Attorney General would look at all the players in the market, from the originator all the way up to Wall Street, who created these loan products, and so, I mean, there's nothing wrong with an ARM. It was just marketed to the demographic that it wasn't intended for. And that demographic then is suffering. We're seeing middle-class white Americans now losing their homes left and right. But it was the African-American community who was first targeted, and many, many seniors who are African-American lost their homes years ago. And now we have to make sure, hold people accountable for what they've done to our communities and how they've stripped our wealth, our taxes, how it's hurting our schools, what's it going to do to grocery stores, what's it going to do to our whole economy. And if the government, if the Attorney General holds somebody responsible, I think we can rest assured that it won't happen in the future.
Ms. Smith, are you ready to roll?
Yes, Mr. Chairman. I'm going to reserve 1 minute at the end to show a public service announcement. Thank you for the invitation to come here. Listening to the questions that arose, we were talking about the $3.7 million and what are we going to do about it. I want to announce that the National Fair Housing Alliance, the Leadership Conference on Civil Rights, the NAACP Legal Defense Fund, and the Lawyers Committee for Civil Rights Under Law has formed the commission. It's called the National Commission on Fair Housing and Equal Opportunity. It is being chaired by former secretaries Jack Kemp and Henry Cisneros. We will be having 4 hearings across the country to talk about what are the problems, what are the issues, what can we do to make the enforcement of the Fair Housing Act an actual reality. And we will be presenting that report in December to your committee and to the new administration. The purpose of my testimony is to talk about the failure of enforcement at HUD and the Department of Justice. As we all know, the Fair Housing Act had two purposes. The first was to eliminate housing discrimination. The second, to promote residential integration throughout the country. And 10 years ago, I testified before this committee, and I implored the committee to give the Department of Justice money for its testing program, because testing is so critical to uncovering not just the individual cases of discrimination, but the pattern and practice, the large systemic institutionalized practices in this country. The department has been doing a good job when it comes to sexual harassment in housing cases. I applaud them for that. They've done some pretty good design and construction cases. The failure is in the rental market, the sales market, the lending market, and the insurance markets. While they've been doing rental cases, they have not focused on the major, large rental management companies in the United States. In fact, after Katrina, we were able to do testing and identified the largest rental management company in the Southeast had engaged in discrimination. We filed complaints with HUD, and that one complaint that we filed in December of 2005 has been conciliated. All the other Katrina complaints we filed with HUD remain open. In the Department of Justice, when I think of their testing program, I would suggest to the committee to talk to present and former employees of the Department of Justice, because I've heard that the testing is moving forward, that they have produced pretty good evidence, but they have not received authorization to file those cases. The testing program is incredibly valuable, but it must be used in mortgage lending. The Department of Justice could actually test through the whole mortgage lending process and get to where the discrimination, particularly in the subprime and predatory market, occurs, and that's at closing. I can't do that testing because if we fill it out, it says it's a felony if we do this on the mortgage loan application. So with justice, we need to get them to do testing that is totally focused on the systemic issues. They should be testing the largest real estate companies in this country. They should be testing the largest mortgage lenders and subprime lenders. And they should be looking at the homeowners insurance issues. Now to HUD. On the aged cases, for me, it's just ridiculous that any of HUD's cases should be aged. The majority of their cases are rental cases. And with all due respect, a rental case is not brain surgery. It's going in to see if an apartment was available or it wasn't available at the time that the person applied for it. One of the problems is that we have 10 little HUDs all over the country. We have a court decision in the Second Circuit saying, how can one HUD say this, hub office, and how can the other division of HUD say something else? And finally, we were talking about why are the numbers so low. Two big reasons. HUD did its own survey that said people have no confidence in filing a complaint with the federal government of housing discrimination. The second is its failure to do media campaigns, appropriate media campaigns. And for the commercial you're going to see now is something we produced in 2003. HUD failed to fund its national media campaign in 2005 and 2006. And what you saw that Assistant Secretary Kendrick showed you is their current ad campaign. And I just want you to compare the ad campaigns, because ad campaigns are supposed to have a call to action and motivate people to file complaints.